Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. Now we have some news about Rivian. As of today, the stock has sold off near and around 20% in value. So we're going to be breaking down what's going on and answering that main question of should you invest in it. So I hope you guys all enjoy this video. If you guys do, hit that like button, subscribe. So let's dive into this one. So now for those of you that don't know what Rivian is an electric car manufacturer. They are pretty much competing in the electric auto space. Now, they're obviously known for something different. They're known for their trucks. Now, Tesla is coming out with their Cybertruck, which is going to be heavily competitive in that truck field. Not to mention, today we had extreme sell-off. Anytime a stock sells off more than 3 or 4%, something major is going on inside the company. Now, they announced a couple of things. Now, the first thing they announced was the company pretty much needs about $1.5 billion. They need to raise $1.5 billion. Now, they're going to be doing this through something called a convertible note. Now, there is a couple of ways that they can do that with this type of deal. Now, a convertible note is kind of like a hybrid between debt and equity in most cases. So pretty much in the short term, Rivian is taking out $1.5 billion in debt, whether it's hard debt or it's equity. Anytime you have that type of announcement, you're going to have sell-off. Debt is a recipe for disaster when it comes to a company. It makes it not worth as much. It pretty much liquidates a lot of stuff. And honestly, it just dilutes the company in general. One of the most common companies or most commonly known companies that took out hundreds of millions of dollars, billions of dollars of debt is Ford. Ford has taken out over $100 billion in debt. They've paid a decent amount of that off now. But during that time, Ford stock was getting annihilated because nobody was investing in it. There's so many shares out to the public and they were trying to raise all this money and it just wasn't the greatest. Now, the last thing I want to see is Rivian falling in the same place as Ford. Now, another thing that Rivian announced was their guidance. So a guidance is pretty much just like they're expected to bring in a certain amount of money. And honestly, this was on par what Wall Street was predicting. Rivian came out and said they're expecting to bring in anywhere from $1.2 to $1.3 billion in quarter three, which Wall Street expected them to bring in about 1.3, so that's normal. So should you invest into Rivian? Now, Rivian for me is a high growth, high risk, high volatile company that fluctuates. It's not like investing into Apple or Coca-Cola or a company like that. Rivian has seen a lot of sell-off. It's seen a lot of volatility where it's gone up 10% and then today it's down 20%. So it's heavily volatile. Now, anytime you have companies that are a little more higher risk often means higher reward. So for me, answering that question of should you invest into Rivian? So when it comes to the electric auto space, I do think we already have the leader of the sector, and that's Tesla. I do think we see a lot of these companies that are trying to compete with them and trying to compete to other electric companies like Ford, GM, Chrysler, but the issue with it is taking up market share. And Rivian's not even taking up 1% of it. So I just think it's not worth the investment. I think the risk level is going to be too high. And I would rather see you guys invest into a company like Tesla, which has already had a proven track record, which has beaten their past deliveries, which is honestly just an awesome thing to see. And I would rather see my money at least going into a company like that. It's always better to invest into a good company at a fair price rather than a fair company at a good price. That's just my opinion, and Warren Buffett, he says the same thing. So if you're gonna invest into Rivian, I do think dollar cost averaging is a great way to invest in it. And I do think keeping it under 1% to 2% of your portfolio is a great way to reduce risk, reduce volatility, still have shares to make money. But yeah, so for me, I'm staying away from it. And yeah, that's pretty much it, guys. Hope you guys enjoyed it. We'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, guys.